high debt. What's the compelling investment story right now about Thailand and about the debt in particular?
Well, it's actually counterintuitive. It's credit, strong credit, very stable yield. And when you think of emerging markets, you think of big rates of return. Actually, this is lower rates of return in terms of Mexico or some of the other emerging markets, but a very stable credit and a very safe investment and a very scalable investment. There's a ton of liquidity in the Thai market, so institutions can move lots of capital very quickly into the market, and as you said, it's one of the strongest currencies right now, so there's also the currency exposure.
And how does that help your investment thesis? I mean, a lot of people, you say Thai baht, and they have flashbacks to the late 90s when we had really an implosion that rippled throughout Asia, Europe, and the U.S.
Right. People learn from their mistakes. The Thai government's made a concerted effort since 1997 not to repeat that. You can think of it now, they're on the polar opposite side of the spectrum. In 1997, it was way over speculated. For all the right reasons, the currency imploded. Now we're on the opposite side of that. An example is that right then it was an A- credit rating. Just in March, Fitch upgraded Thailand to BBB+, so we're only one notch from coming all the way back. The baht actually at the time was 25 baht to the dollar, spiked up during that time to about 50. We're at around 29. So we're effectively polar mirror opposite. Now the most important thing is how Thailand came out of the 2008 crisis. And let's face it, it's happenstance, a lot of it, but they came out of the crisis with an incredibly strong balance sheet in an incredibly strong region of the world, which allows them to have a strong economy at their back that's pushing in this time that they're actually, their credit is actually stronger and their banking system is very strong. But then you also have the region that's also exploding, which is Myanmar, Cambodia, Laos, and then you have the natural influences of the United States and Japan that are pushing in their way, and China pushing in its way, and that's pushing Thailand up.
Well, let me just jump in and play devil's advocate for a moment, because you said strength in the region. We know there's concerns about what's happening in China, the ongoing worries about a slowdown. They've been kicked up again. And in Japan, of course, you have the weakening yen. So is that a potential negative for Thailand?
First of all, Thailand's one of the most important strategic assets for the United States in terms of military. The United States government actually has the largest landing strip in all of Asia in Thailand. Cobra Gold, which is the largest military exercise in the world, happens in Thailand. So you have this enormous military strategic interest that's the United States, all of the commercial benefit that's come in, like IBM, big companies with massive manufacturing, and then you have the largest investor in all of Thailand are the Japanese. So their interest is purely commercial. Now you have the Chinese that are also trying to break into the region to go north-south. So they're looking to find clever ways to finance large infrastructure projects that simply help them with the land route. If you look at 600 years ago, Thailand was the center of Asia because of its location. It's a peninsula. Right. You have India that comes over, that's where the Buddhism came from. You had the Chinese that were basically a large population and a strong empire at the time. That's why Thailand was the center of Asia. Well, it's happening again. Okay, it's more fragmented. You know, China still gets the major headlines, and obviously Japan's the developed market. But Thailand's really in a spot right now, regionally through that land corridor, to actually be the knowledge and thought leader for the four countries I mentioned: Vietnam, Cambodia, Laos, and Myanmar.
So what sort of returns can you get from the structured debt that you're
basically,
offering?
we're marketing, or we structure fixed income. It's a pure fixed income with a fixed yield. Our product's 200 basis points better than governments at all times. So you're looking at a 5.5% Thai baht denominated yield. That's 2% better than governments, with an instrument that's actually one notch rated above governments. So our instruments are investment grade. They're A3. Very boring, stable stuff, but the world's starving for yield because the United States and Europe it's quite obvious, they're keeping rates quite low, trying to rebuild their economy and then inflate their way out of the debt situation. Well, there's where the yield is, with stability.